Alright guys, I want to show you what goes on into a trade so you guys can see what happens and the frustration when a trade doesn't go your way. So usually the way the market moves is you have a leg. In this instance we're looking at the euro dollar that goes up, another leg that goes down. That's market structure. This lower low never broke this low here, so we are on an uptrend, right? So we are coming up. You expect this leg here to break this high here and continue the train up, right? In the meantime, everybody that went long on this leg here, they put their stops at this point here. So you have supposed to be sell liquidity. I usually use it backwards. Sell liquidity at this point here. Let's call it buy liquidity, which is orders in case the market goes back down. They sell back here. They sell back. So they mitigate their losses. They basically break even. And then the same thing is true with the people that go short on this leg here. They put the stops at this point here. So they are basically buy stops. So if the market was to turn on them, they buy here. They buy back their sales, right? So that's the market dynamics, right? So what happens is when you have news, usually you have a news push, right? They call it a news push. Let me go to a lower time frame, right? So I'm trying to show you the logic of my trades. So sometimes when the market moves fast, in this case we had dollar news, the US market, and the market moved very fast down. It was good news, relatively good news for the dollar, the US dollar. So basically you needed less dollars because the dollar value went up to buy euros. So the euro dollar went down fast, right? So when it went down fast, it left this gap here. You see this gap here? They call that market inefficiency. And usually the market comes back up to fill all the void that was left behind. So what traders do is they usually go in the direction of that void because it gets filled. 100% of the time, this voids like this get filled. So I saw this void here. I went in around here, and the market went down, looking for liquidity. It found liquidity. It tripped us out, and now it's hovering around this price here. So I went back in at this point here, and this is when I said that this will be my last trade. If it comes back down, so I put the stop, I put our stop below liquidity. But there's another liquidity pool below us. If it comes back down and it trips us, I'm not going to trade anymore. So basically what they do is they come back down, they trip your stops, which means that they buying whatever position you have cheap. So then they could go back up and fill the gap. So the reason that happens in the forex markets is that the forex markets, they are dominated by market makers. So what market makers do is they see your orders, and that's a conflict of interest. They see your orders in the market, so they take the opposite side of your orders. So for example, in stocks and futures, all the orders get pulled into a central market independently of the market maker. So buyers get paired with real sellers, and real sellers get paired with real buyers. So what happens is that in the forex markets, there's a lot of manipulation, and you see that all the time. So for instance, you see it clearly here. You see that the market went down. A lot of people, like we did, went up, bought here, thinking that the market was gonna go up. They fake you. They hold it, right? They come down. A lot more people go up. They fake you again, make you think they're going up, right? They come down. They trip some people. they didn't trip enough people, right? They fake it again, make people believe that they're going back up. Everybody put their stops over here, because obviously they went down here, trip stops. They went down here, trip stops. So they're not gonna come back down. They went down here and trip stops. So you're gonna put your stop at this level here, this level here. So what do? They see all those stops, and that's a conflict of interest. They shouldn't be seeing stops. They come back down and trip everybody. They buy everybody's orders on the cheap, and now they're waiting again. And we are stuck on this trade here. We're actually on this trade here. We're stuck on this trade, and at this point, I don't know if they're gonna go back down, trip everybody back up, and then eventually fill this gap here. They will fill the gap, but it's a matter of when they're gonna fill the gap. So right now, this is our trade. This is my stop. I put the stop at this level here, 1.0687. This is our entry here, and this is our take profit. And that's what goes into a trade. All right.